What's going on, YouTube? It's Dave's Daily Trades, back with another update on AMC. So, first of all, I hope you all had a Merry Christmas and just some great time to relax, get away from charts, spend time with family and friends. I know I really enjoyed it, and I literally didn't post anything AMC related or even look at a chart the entire weekend. However, it was great today to get back in the swing of things. Although the day didn't really do much at all, it was still great to be back in action. But nonetheless, guys, in today's video, we're going to be doing a technical breakdown of where I see AMC trading for the rest of the week. We're going to do some comparisons of the pre-January run-up to where we currently sit right now, and this is some really interesting stuff. We'll also take a look at options flow and some various bullish news in regards to AMC. But without further ado, let's roll right into that intro and hop into the technical analysis. And we're back. All right, guys, I promise you, you are actually not having deja vu. Looking at this chart, and you'll see what I mean in a second here, we're going to look at Friday's trading action, or sorry, Thursday's, because Friday was closed. It was a holiday, compared to today. And it is literally identical. What happened was we get pushed down in pre-market, and then just an automatic reaction of volume to the upside, consolidate just about in the middle of the day, and then trade low. And as we can see with the volume on Thursday, you start with decent volume in pre-market, nothing too crazy, and then volume just gets eaten away throughout the day. But literally, almost to a T, it played out exactly the way it did on Thursday compared to today. Look at this. We open here, we come down, almost test the same range as before. We tested 2702 today, and on Thursday it was 2683, so pretty close to that. Then we get a good size push to the upside, consolidate middle of the afternoon, and then trade lower. So really, really interesting things playing along here. And also, if you guys do notice, I do have a Fibonacci retracement, which we are going to be talking about a bit later in the episode today. Looking at this low here, the terminal shakeout, right at $20.80 to our recent high of just about $32.22. And where we have been bouncing is right above this 50% retracement level. And it looks like once we do dip down into this area, we have an automatic kind of bite. The fish was hungry at these levels, and we bite right back up. But then we do get hung around right at this 23.6% retracement. And that equates to $29 and call it 50 cents, which seems to be an area of resistance. Now, a really great thing that has been playing out, which we've been discussing for some time, is this inverse head and shoulders pattern here. So you have your first shoulder here playing out from 12.1 to 12.6. You have your head here, which also is your terminal shakeout on the larger scale Wyckoff schematic accumulation. And then we do have our finished shoulder here, or which appears to be our finished shoulder, right from just about 12:23, so last Thursday, to present date. So this should play out nicely, and of course in the bullish favor, and start a reversal to the upside. Now, some points to note here. We do have this downward trend line here, first established after our first shoulder on 12.8. We touched again here on 12.21, and we do look like we are going to come up if this inverse head and shoulders plays out. Hopefully tomorrow. That would be my guess. Tomorrow we come up and retest that $30.26 range. Now, it's not guaranteed that we break out of this. However, the head and shoulders pattern, or the inverse head and shoulder pattern, should absolutely help the breakout case. Now, worst case scenario, we do start to kind of symbolize the same pattern that has been playing out, where we dip down in the morning, and then we have that big green candle that pushes us up. Now, we could get rejected and kind of consolidate and trade throughout the week, because the big thing, guys, what we've been talking about is volume. We did have that good volume here on the terminal shakeout, and then also here, which was a couple Fridays ago. But since then, volume has been on the decrease, which is not the greatest thing to see. Now, if volume does pick up, we'll absolutely break through this. But really, tomorrow is a key date to see if volume can ramp up and if we can break back into the $30 range. Now, as I said before, I have been looking at the pre-January run-up compared to where we currently sit now. And I've actually been using the 30-minute chart, and for some reason, my chart wanted to go crazy. But we'll jump back to it here for you folks. Just give me one moment. So what I've been looking at, and as you can see, we do have that similar Fibonacci retracement playing out. Oh, zoomed in too much. And there we are. So this, to me, looks very, very similar. But on the time frame, because I know there was a lot of people who have been comparing this, and they were saying Tuesday is going to be a crazy day. We're going to see 20%. And I'm absolutely going to disagree with that on a couple of reasons. First of all, volume is way too low to get this massive breakout. That did occur back on like the 15th of January, 2021. So almost coming up on a year ago, which is absolutely crazy that we've been in this play for almost a year now. Time really flies when you're having fun. But anyways, before I get too distracted here, also this, I guess you could say fractal, this pattern, whatever you do want to call this, can be sped up or slowed down at any time frame. So the moral of the story of this is no dates, guys. Dates do not matter because I promise you, you are most likely going to be wrong. When this does happen, it's going to happen. And it's probably going to come at a very unexpected time. So just be patient. We've already waited, for most of us, just about 11 months for this to all play out. So what is a couple more weeks or months to add on top of that? And honestly, it's almost a good thing because we have the long-term capital gains tax coming into effect right after next month, for most of us at least. And long-term capital gains is just a smaller tax that you do have to pay, rather than if you get into a play and you sell within, like, let's say 3 weeks or 2 months. So that's all it is. So there would be tax benefits if this plays on a little bit longer. But anyways, guys, what I'm actually looking at is this pattern here to where we have AMC sitting right now. So, of course, we did have that terminal shakeout on 1.5. That was equivalent to what happened on 12.14. But looking at the volume, looking at the charts, really interesting stuff. So, A, you do have that first initial volume spike, which is great to see, guys. Because if we look back, volume was relatively dried out here for AMC, that pre-January run-up. Now, this volume spike did show some signs that AMC still had a heartbeat left, and things were just getting started. Now, as we can see, we do have these volume spikes, and these are coming in early in pre-market where you do have jumps and then dips. Jump, dip, jump, dip, jump, dip. And I count 4 right here. Now, if we look back in AMC right here, a similar thing plays out. And I know you can't really see this, but I do have this labeled 1 here. But the Fibonacci retracement wanted to cover it, so we're going to put it here. But you have your first jump. You come down. You have your second jump. You come down. You have your third jump. You come down. And then you have your fourth. And that is really your localized top in this trading pattern, we'll say. Now, what happens next is really this consolidation phase. And from this Fibonacci retracement, you do consolidate right around that 50% retracement. But look at this. Where were our 2 bottoms, both on Thursday of last week and for today? It was right above that 50% retracement level, which is exactly what played out here. So really interesting. And what kind of happens here is you dip down, you trade up. Then you dip down, you trade up. And that's the exact pattern that we've gotten the past 2 days. So that's why I am in belief that tomorrow we are going to have that gap down, or not gap down, just negative price action in the morning with a lot of consolidating, a lot of kind of volatile price movements. But what happens in this next D3, as I call it, because we have our first dip here, which was Thursday. We have our second dip, which happened today. And then after this, you have your dip 3. But with dip 3, you do have volume starting to increase here, which is great because volume's been dead, relatively dead. So we need to see volume increase. If dip 3 comes in tomorrow with added volume and we start to see volume ramping up like this, then I am absolutely bullish that, well, what happens next is something like this. And this is not going to be a overnight thing that we're all going to miss. No, it's going to take days to play out. And I'm personally under the impression that this is not the MOAS right here. This is not the mother of all short squeezes where we go to $10,000. I think this would symbolize the next leg up, ranging from, who knows, maybe $150 to $300, somewhere in that range. But of course, putting price predictions on this is very difficult. What I've personally done is I've taken, and I do have some past videos on this, I'll link that in the description below, but I've just taken the percentage from this run-up, from the low to the high was just about 900%. From June's run-up, we had just about 700%. So I think it's going to fall in between that percentage of a move to the upside. Now that puts us right around $220. But guys, at the end of the day, it doesn't matter because shorts still have not covered, and they probably won't cover from this move. Now, like I've been saying, we need to see that volume ramp up. But interesting enough, what we've been seeing is declining volume throughout the day. But today, we did have a little bit of ramp up from just about midday to the end of the day, symbolizing that we could actually be somewhere over here. Now, these dates, refrain from dates, guys, like I said before. But if this plays out, we have volume ramping up, this could be what the end of the week looks like. Getting out of this range and to the top of this range. So maybe $32, $33. That would be perfect. But of course, guys, it's not going to look exactly like this past historical move. There are going to be some distinct differences from this all. But I think it gives us kind of a time frame or an idea of how AMC may move. Now, enough with the charts. I do have some additional information I want to bring to you folks. First of all, Spider-Man No Way Home. Also, I love all the memes going around about this. I find it absolutely hilarious. You all know what I'm talking about, I hope. But anyways, this movie became the first pandemic-era film to break $1 billion at global box offices. That's great to see, guys. Nonetheless, AMC is not a dead cat. People are going to the movie theaters, even with COVID. And guess what? We have even more exciting releases coming out. I mean, Matrix was just released last weekend. I think the data from that should trickle in probably about Tuesday or Wednesday of this week. That should be absolutely bullish because Matrix hasn't made a movie since, what, like the 90s, something like that? Or at least probably before my time. I'm personally excited for that movie, but still, we love to see this. Now, secondly, I know a lot of people, and shout out to Wolf on My Street for posting this, we're talking about this kind of new agreement that came out. I had a couple DMs, so I just want to make a statement on this. All this states is AMC entered into a new credit agreement that pretty much just extended their period from the last credit agreement. I believe they just got one additional year. This is nothing that is really too crazy, something that I personally don't find that important, but still, it's good to see that AMC has a good relationship with the credit lenders and that their credit rates are not going up. They simply extended for one more year, which, decently good thing. Now, the OBV. Guys, we talked about this Thursday, and it's some great stuff. So actually, let's pull up the OBV here on the, we're going to go to the 1 hour chart, actually. So here we are. And we're going to get rid of the volume here because that really doesn't matter. And we're going to blow this up for you folks. So what we have is OBV sitting at just about 319.3 million. If we look back and we just put a small little trend line here, we can see that OBV is equal to just about this era over here. From just about 9.3 all the way to 9.8. Look at this. We're at 47, just about $50. when we're at this time frame here, and even looking back recently, we hit a point that was equivalent to this over here, still in the $50 range. So showing that there is some huge divergence on the OBV, similar to even back when we're in the $55, $60 range, as we kind of shouted out last Thursday. I mean, something fishy is going on. Now, of course, guys, we have been really just all about the Wyckoff schematic and how we are in that accumulation phase right now, which means big institutions are accumulating. But why are we getting this divergence? Well, during this trading range that we are established, right around from $48 to $52, and from just about $28 to $32, that is your trading range. So if the OBV is rising, accumulation may be taking place, a warning of an uptrend breakout. And also, to add on to this, we did see some massive 13Fs that were piling in all of last week. And really, looking at the charts here, this was a key range to see the accumulation schematic happen in real time, where we did have that terminal shakeout, which is exactly where we want to see institutions piling in. And specifically, guys, look at this volume that came in. I mean, I believe it was sometime last week 2 weeks ago, we saw almost 150 million in volume, which we have not seen in a very, very long time. So that's why I am extremely bullish. Now, I know some people will say we might be expecting some more downside, yada, yada, yada. But, I mean, the big thing is this volume push that came in from this $24, $25 area was really great. And especially when we did have that drop to $20, we had great volume piling in. So that's why, yes, I believe we might see a little bit more downside, maybe to 25, 26. Although I do think this low right here of that 2080 is in. So we'll see what happens throughout the week. Nonetheless, I do think we are going to have a little bit more bouncing around and consolidation before breaking out of this trading range here. But things are looking good. Everything is going as planned. But guys, that's all that I have for today's video. Be sure to smash that like button, subscribe for more content. Peace out, and tune in for the next one.